This is 10 Capital AMA event. I'm Hall T. Martin, the host of the show, in which we interview investors and startups on current topics. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website.
My name is Hall Martin. I'm the founder of 10 Capital, and today we have joining us Johan Jacob of Retailbound, and he's going to talk about getting into retail after you've raised capital for your product startup. And with that, I'd like to go ahead and bring Johan over to talk to us about that topic.
Thanks, Hall. My name is Johan Jacob. I'm the president and founder of Retailbound, and today's topic is how to get into retail after you raise capital for your product startup. Today's agenda is really pretty simple. Give an introduction about myself, real brief, and I have really two lessons. One is, are you ready for retail? Just because you have a cool product, you get some money, doesn't mean it's truly ready for retail, where it's a Best Buy or it's a Walmart. And then also talk about when you already talk to retailers, how to get their attention. You know, retail buyers like myself get so much inquiries, whether it's over the phone or in person. How do you stand out on the competition? So it's a little about me, back when I had hair. But Retailbound has been around about 14 years. We're a retail solutions agency that helps innovative brands scale in retail. I personally have been in the industry for almost 30 years now, and I've helped brands expand both in B2C as well as B2B. As a retail buyer, I was in charge of two different billion-dollar chains and managed some large categories. You see here on the screen, between 45 million to about just shy of $1 billion a year. So myself, as well as my team, have the experience helping brands launch into retail, whether it's the U.S., Canada, or abroad. So today, you're going to learn a couple of things from this webinar. One is you're going to learn how retail buyers like myself think. We don't just play golf and go to dinner. We do actually do work once in a while. So kind of tell how we think and how to sell them, how to work with them. And finally, actually how to present your products to retailers. It's like presenting to an investor, right? Like a Mark Cuban, right? There's certain do's and don'ts. So we'll kind of tell you what you should do when getting in front of a retail buyer. So a lot of times, with COVID, the last 2 years, a lot of young brands, why should I pursue retail? I mean, I'll just sell my own website. There's a couple of reasons why you want to pursue retail, especially in the US. One, retail can give legitimacy, or I call street cred, for product brand. Obviously you're not Sony or Samsung. How do you know, right? So getting in front of a Best Buy or a Walmart does help give you some legitimacy with consumers. Many customers, like myself, like buying products from startups at name retailers because maybe we feel secure when giving our credit card. We know that reason going to ship on time. And if you issue it, we know they're going to back us up. So having your product listed with a major retailer does help, again, customers like me find your product and purchase them. Over the last 2 years, because of COVID, retail are definitely up there, we call omni-channel game. So including brick and mortar, they've improved the experience, both their web and their mobile platforms, to help make it an easy or seamless transaction. And while online sales, I was talking to Hall earlier, has been definitely growing for the last 2+ years, other verticals have been strong for product brands, such as TV response like QVC or HN, as well as catalog. Hard to believe, but print catalogs. I just got 3 yesterday in the mail. It's still a stable business. And finally, retailers are still looking for new products to fill their shelves. Trying to find something different, right, to drive people to their stores or their website and beat the competition. So again, these are the top reasons why you should pursue retail once you get capital from an investor. So typically on these webinars, to be asked a question, I know we only have about 45 minutes, so I won't ask you guys to answer this question, but there's a secret, right, in be successful retail buyers. And so when dealing with retail buyers, your number one goal should be making a retail buyer's job easier. It seems common sense, but I can't tell you, in my decades of experience, how hard it was for me to work with younger brands that were inexperienced because they made my job a lot harder than it should have been, right? And by the way, for manufacturers, or we call vendors, who make it easy for retailers like myself will get more opportunities. It could be more shelf space in store, more online space, free marketing assets. Right? There are certain things that retail bars can do to help grow your business as long as you make their job easier. If you make their job easier, it's a good chance to be a long-term vendor partner. And by the way, if you don't make my job as a buyer easier, I guarantee you're accomplishing well. Now, the question probably asks me, so, well, Johan, how to make a retail buyer's job easier? Really straightforward. So these are the main, dozen or more things to get their job easier. The main thing is really communication, whether it's over email, whether it's over the phone, but you're upfront. If you have bad news to share, like a cost increase, which has been a topic of discussion for the last 12 to 24 months, right? Where you get the bad news now to the buyer, don't wait too long. If there's a shortage, shipping delay, right? You always want to over communicate, right? You hate to under communicate and under deliver because I guarantee you won't last very long in retail. Other things make the job easier for a retailer. Complete new setup sheets. So when you get the green lights and you asked to be a vendor record, you got to fill out some documentation. Again, can't tell how many times I received a setup sheet from a brand that was half done, right? So make sure you complete fully and accurately. Having images or samples ready to shoot, pricing, lead times, all these things are fairly explanatory. The last two things I want to kind of touch upon, one is marketing. When you're a young brand or unknown brand, a retailer like Best Buy or Walmart isn't really going to market for you. And I think that's probably the biggest misconception for brands once they get their VC or funding from VCs is, oh, I got a Best Buy, my job's done. No, it's not. It's just begun. You need to have a marketing plan or a marketing strategy. I hope that some of that VC will help to drive traffic to a Best Buy store, a Best Buy website, and between some of the marketing vehicles that Best Buy offers to young brands. And also in certain categories, especially like consumer electronics, where products transition or change much quicker, have an extra strategy. So before you use Best Buy again, product A, right? Hey, what's your extra strategy for product A when product B is available in 10 months from now, right? So these are things, again, as a retail buyer, we expect you to do or provide to make our job a little bit easier. So at Retailbound, when we onboard new brands, it's like a retail buyer. There's a couple of questions we ask. And the first question is, do you have products that customers want, right? So if it's another iPhone case, right? Probably, it's pretty generic, right? So how do you stand up in the competition, right? But do you have products that actually want and will buy, right? From a retail perspective, do your products turn enough margin, right? Unlike your own website, right? A retail buyer buys it at a cost of X and sells at a price of Y. And the difference is, we call the margin, is what they take for the bank. And finally, what we ask is, do you follow through on promises you make to people? And you ask, well, why would a buyer ask me that question? Because at the end of the day, if you're an unknown, untested vendor, they're putting their reputation on the line that you're going to follow through. You're going to ship on time. You're going to drive traffic to the stores. You're going to do the things necessary to make the buyer look good, right? So at Retailbound, we have a lot of young brands with this, with their go-to-market strategy. I was a new brand today. Before I start talking to retailers, I want to put a paper to pen, a pen to paper, and develop, who are the key accounts I should go after, right? If I'm a premium brand, Walmart and Target probably would be my lucky suspects. If I'm a up-and-coming brand, maybe a bigger retailer in my forefront right now. So understand who are the retailers for your brand, right? Identify or through various sources. Now, their buying patterns. Many categories, especially in soft lines, they're usually a 12 to 18-month window out. So right now, Target on the soft line side, they're actually working on, if you can believe this, spring of 2023, and pretty soon, summer 2023, right? It's just amazing how far they work out. You also want to understand how retailers doing. Are they, you look at annual reports, or again, various news outlets. Are they opening stores? Are they paying the bills on time, right? Because you need to sell to a retailer that's on its way out, ready to declare bankruptcy, Chapter 7 or Chapter 11, right? Another thing to think about part of your strategy is, do you want to use distributors? If you're a small brand, most likely probably go to distributor. If that's the case, you need to have the pricing and the support ready to manage both the distributors as well as the retailers. Finally, part of your go-to-market strategy should also include .com versus brick and mortar. Many large retailers today, when they have interest in your product, will probably put you on .com. Why? It's a low risk for them. Online has definitely grown a lot over the last couple of years. So if you are online, or we call it .com, it's a good opportunity that you'll actually get into brick and mortar down the road. But these are the things you want to put together in your plan before you start knocking on doors with retail buyers. Now, honestly, we all make mistakes, right? No one's perfect. The biggest one, and hopefully this won't happen after this webinar, is lack of preparation, right? Again, like a job interview, retail buyers can tell which brands are ready to work with them and which aren't. The ones that aren't ready to work with them waste their time, waste the buyer's time, and we'll get a second chance of making a first impression. So hopefully after this webinar, you get enough tips to be prepared and not have this common mistake. Another one is over-promising, under-delivering, right? In sales, especially as a new brand, you're trying to be an eager beaver and trying to get the buyer to say yes. But you don't want to overcommit yourself and tax resources. So if you cannot get a thing done, don't commit to it. It makes it look bad as well as the buyer. This one, probably not as common, but lying. If you don't want to lie to get a sale or get the business, so make sure you don't do that. Again, common sense stuff. And finally, as we hear throughout the presentation, poor follow through. As a retail buyer, I met a lot of young brands, and I was a little different because I was a manufacturer first before the buyer. And I always tell all my brands when I first started them, I only have one pet peeve. One was poor follow through. Meaning that if I ask you to get something done, if you don't get it done, because you're not in a timely manner, I'm going to look elsewhere, right? So make sure that these 4 mistakes you guys don't do if you want to be a successful brand in retail. Now, before you meet a retail buyer, there's some things you need to do, right? You don't waste their time or your time. So you want to make sure that a sample is available, or at least an image on your PowerPoint deck, because then they're very visual. They want to see what it looks like. They also want to see your product packaging. If it's .com, like Amazon, a white box or a brown box is fine. But for a retail like a Best Buy or Walmart, your product packaging is your best selling salesperson, right? On average, a consumer will look at your product between 2 to 5 seconds, and how quick they walk through the aisles. So again, the retail buyer wants to look at your product packaging, or at least make sure you've done some renderings they can review and give some feedback on. You also want to make sure you have pricing and any other program fees that have developed. Again, you don't waste their time. If you can't afford to work with that particular retailer, no need to make that pitch. You also make sure that is, again, common sense stuff, that you've identified the benefits of your product, the key selling points. Again, don't expect the retail buyer to be an expert in your product. It's up to you to kind of convince him or her why your product is awesome. You also want to let the buyer know what makes you different. If you're a pair of Bluetooth headphones, and there's a lot of them out there, what makes your headphones better than competition, right? You also, as I mentioned, 2 slides ago, your marketing plan, your PR plan, your promotional plan. Because again, for a small brand, a retail product like Best Buy isn't spending a lot of time because he or she's managing some bigger brands. So it's up to you to kind of show the buyer what's your marketing strategy, what's your promotional strategy, what's your PR strategy to build awareness of your brand overall and drive traffic to that particular retailer store or website. Things you want to make sure you know before you meet with a retail buyer. One, we probably be able to ship, right? It's available to ship in late Q2. We're going to ship in early Q1 next year. That's important, especially for retailers that have stores. It's only certain times a year that they allow new products into their stores. They can reset the shelves. So when your product will be able to ship is very important for a buyer to know. Like a baseball card, all the stats, right? How are sales? Year to date, month to date, week to date, right? That's very important. Many buyers like by untested, unproven vendors. So it's important that you know how are sales overall by retailer or by channel. You also want to know the percentage of customer returns. Because again, you might be selling 100 a week, which might be good. But if you can return 20%, that's not good at all, right? So they want to know what percentage of your returns are defective versus more. They also want to know what do you do to address that? How do you get that number down from 20% to 18 to 15 down to single digits? Also, if you are pushing to retail buyers, if you're on .com sites, you want to make sure what the pricing, online. You need to go into a meeting with a buyer like Best Buy, and they find out quickly on Walmart, you're $10 less. Or on Target, $20 less. What the heck, right? So you want to make sure the pricing, especially if you have MAP pricing, which is called minimum advertising pricing, is consistent across all channels. That not one retailer is lower than the other. You also, thanks to Amazon, they've been a big part of this, customer testimonials, right? And that's great about Amazon is that every buyer has access to see your content, your price, but also your reviews. If you're a 3.5 star or below been on Amazon, that's probably a little challenging to talk to bigger retailers. You're a 4-star and above and have several verified reviews, the conversation will be a little more pleasant, with that particular retail buyer. The other question I asked in these kind of webinars is, how do you find retail buyers to contact? You already got prepared, right? You're ready to go now. You're shopping at the talk to Best Buy or Walmart. How do you find the right retail buyers to contact? So here are the answers, right? The first one is networking, especially with LinkedIn and other sources, online, offline. This is a big part. When I first started back eons ago as a manufacturer and there was no internet, right? A big part of my sales was networking, building relationships with maybe existing suppliers, other agencies, our alliances, right? So networking online, offline are very important, helping you, find the right buyers to talk to. Other way we call inbound. So where direct response advertising, email blasts, inquiries to website or ads. Several times as a retail buyer, I may have saw something that's in the press via PR, and I made an inquiry, right to their website, or I called or I emailed, right? So this is another source, again, leads from retail buyers. Trade shows. Now, honestly, trade shows, I was talking to a colleague of ours in London this morning. Honestly, trade shows aren't like it was in 2019 or 2018, but it's far better than it was in 2021 or 2020, right? The last trade show I went to was probably about 2 months ago. It was definitely quiet, but business was done. People did come to the show. Maybe not in the same level it was 2 years ago, but it's coming back. So hopefully, by next year, trade show will be back where it used to be, and it'll be a good source of leads for you. And I'll show you in a couple of slides now some tips and strategies how to use trade shows to your favor. And finally, directories. Again, when I started out back in the early 90s as a manufacturer selling to retailers, again, there's something called the internet. So there's directories. One's called a chain store guide. There's the website right there. It's a great directory. Gives some retail buyers names, or at the very least, the thousands of retailers. We all think of like Best Buy and Walmart, but there's literally hundreds of smaller or regional retailers to be a good fit for you and do as much volume combined than one large retailer. So don't count out these smaller brands, retailers. It can be a good fit for your go-to-market strategy. So today's retail buyer, it's interesting. My wife would think, all you do is play golf and have dinner with your vendors. It's more than that. Today's buyer, they have most of them have a lot of responsibility on their plates. They're literally running, mid-sized companies. My biggest line was close to $1 billion a year in annual sales. Just my line, right? They're very busy. There were a lot of hats. So if you reach out to a buyer and don't get back to you, don't feel bad. They just got a lot of stuff on their plate. I would say more today than it was maybe 10, 20 years ago. Buyers are more spreadsheet literate. They know their numbers inside and out. And typically, it's probably not the best thing. That's how they view products. Will your product drive enough sales? It will generate enough margin? And will turn X number of times per time. So yeah, they're very spreadsheet literate. They're also looking at other KPIs like markdowns, shrink, other KPIs to help them manage their business. Mondays are always a bad time if you're a potential supplier to reach out to a retail buyer. Why? Because weekend sales are usually the biggest for most retailers. So Monday mornings, the buyer is out there, getting sales data and putting reports for senior management. So again, if I'm a new supplier, I don't want to bother a buyer on Monday. Call them on a Tuesday, Wednesday, or Thursday. Larger retailer buyers have a staff that reports them. I had 8 buyers and 4 assistants in my last gig. In most retail, the retail buyer does not manage the inventory. No, they place the order. There's usually a separate team. However, the retail buyer is accountable for that inventory if it doesn't sell through, right? So the buyer is working with his inventory planner to make sure inventory is in the right stores at the right time. And finally, we talk about marketing. At a high level, a retail buyer is managing various marketing events, where it's in store, online, and so. But you can see here that the retail buyer is very, very big, like any other type of job. But it's kind of cool. The retail buyer is the only position in corporate retail that affects every department at retail. It could be international, what we call sourcing. It could be accounting or AP. It could be visual merchandising or in-store visual marketing. It could be store marketing, other buying teams, IT, legal, right? So again, the buyer is the king or queen of their own kingdom, but they're pulled in multiple directions. So retail buyers, when deciding what products to keep, which ones not to move forward with, they look at 4 things. One is the customer demand. If your product is, a face mask, right? The demand is probably not as much as it was maybe 2 years ago, right? If your product was the next smart home product, right? Make your life a little bit easier. Okay, right? Look at the quality, look at your availability, look at your pricing compared to the competition. Market trends. Honestly, in some categories, there are growing leaps and bounds. During COVID, there are 5 categories that did very well. Products that you work at home, products that you study at home, products that you cook at home, products that you work out at home, and finally, products that you play at home, right? Last year in 2021, there was a 6th category, products that you travel from home, right? So they look at market trends, see where are customers buying, where they're shifting towards to. Also look at store policy. There's some retailers can't carry certain products due to, whatever rules they have. So that's also in consideration as you're talking to potential retail partners. And finally, like you and I at home, they have their own financial budgets. They have a checkbook. There's no money tree in the backyard. They do a budget they have to apply to. They can't be over inventory, under inventory. So these are the 4 things they look at before they say yes to a potential supplier. But at the end of the day, a retail buyer wants to beat the competition and drive more traffic to their stores, their website, or even their catalog. So one of the questions I get asked a lot is, if I have a contact name that I use Best Buy, should I cold call them or should I cold email? There are pros and cons, right? Well, obviously, cold calling, you can get immediate feedback right away, right? Emailing, it's cheap, it's easy to do, right? The disadvantage of cold calling is who likes to do it? I don't like doing it. Most people don't like doing cold calling. They don't like being rejected. For emailing, the biggest advantage is it's spam. If I don't know who you are, as a small business owner, I get usually hundreds of emails a week asking me for my time, right? Don't know who they are. It's late, right? So, so which of the 2 methods have a higher success with a retail buyer? It's really the cold calling. Hard to believe, but if I can reach out to a retail buyer and get a few minutes of his time and then email them what I just discussed, it'll go a lot farther than trying to spam them to get some information. I would tell you also from personal experience, one of the main mistakes I made as a manufacturer is do not send unsolicited samples. Unless a retail buyer has asked for a sample, don't send one. If you have money to burn, send it to me. When I was a manufacturer, I sent so many free samples when I've been asked, how am I getting a call back? When I became a large retail buyer, I'm like, who's sending me samples? I had no space in my office, right? I usually gave them away or throw in the garbage. So do not send samples unless asked upon by the retailer. Now, when you're doing cold calls, right, cold to a potential retailer, the two roadblocks is voicemail, right, as well as gatekeepers. But gatekeepers got to be persistent. Hopefully he or she will let you in to talk to that particular buyer over the phone or in person. As for voicemail, to stay alive, I personally would leave a voicemail. I would try again, maybe before hours or after hours, get over the buyer and see how I can get a little time on his or her calendar. Now, by the way, when you do reach out to a buyer for the first time, the purpose of that call is not to sell them on your product, right? Which is hard to believe. Initial phone call is a second date, where it's another phone call or in-person meeting. That's the purpose of that initial cold call or phone call to the buyer. You have about 60 seconds to about 2 minutes at most to keep the buyer online before he or she hangs up the phone. In this pitch, the first thing you want to do is you want to introduce yourself, then come here to work for him. Don't be honest. My name is Yohan. I work at Retailbound. I'll give a quick one sentence overview of your company. We're a retail consulting agency. We help young brands scale in retail. Okay? Now, this is really important, and hopefully you're taking notes. Before you go into your pitch and while you're calling, ask the buyer, is this a good time to talk? I cannot tell you where the buyer, even say, my own job, the bit of the phone, I got some salesperson trying to sell me, asking versus, hey, is this a good time to talk? Maybe I only had a good phone because that was my wife. Maybe I didn't see the caller ID, right? And I got a meeting in 5 minutes. So always ask before you go into pitch, is it a good time to chat with he or she, right? And if they say yes, then tell them why you're calling. Well, I'm a young supplier. I got some investment. I've been in retail for a short time. I'm looking to expand. And I thought you'd be a great place to talk to, right? Or I've been a customer of yours for many years. Been shopping in your stores. I know there's a gap in your assortment. I got a product. Fill that gap. Do you have time to talk? So these are some possible appointment-making phrases. Now, Bob, as I said earlier, most buyers don't like experiment with an untested or unproven vendor. That's true. So, before you go to see a Best Buy or Walmart, start more smaller retailers, get some sales, get some reviews, right? And then go after the bigger retailers, right? By the way, if you happen to do talk to a retail bar, large or small, you hear about probably 4 objections. These are the more common ones, and how best to answer them. So the first one is, hey, I don't want to be the first retailer to carry it, right? And that makes sense, especially if you're unknown, unproven vendor, right? So maybe you talk about your marketing strategy, how you're going to drive traffic to their stores or their website. Maybe offer a guaranteed sale. So if by chance your product doesn't sell through after a certain amount of time, you buy it back, no questions asked, right? Another one is, hey, I'm over inventory, I have no open to buy. It means they have no money, right? And as consumers, with inflation, we all kind of understand it, right? So maybe you offer extended payment terms. For most retailers, payment terms are usually net 30, net 60, which means that when you ship a product to a buyer on May 2nd, and you have net 30 terms, it means you have 30 days to pay your invoice, right? Another option is instead of offering extended payment terms, offer consignment, which I'm not a big fan of, but it's a strategy where consignment is basically, if it's Best Buy, they purchase 50 pieces, but I'm not going to pay for 50 pieces. I'll pay you when it actually sells, unit by unit. So if I ship 50 units in April to Best Buy, they only sold 3 units in May, I'll get paid in June for 3 units, okay? But it's a strategy if a buyer doesn't have the money to buy your product. This is probably the most common one. Your prices are too high, right? And it's very easy for a young brand, especially if they're not experienced in negotiating, to lower their price. I'd not recommend that. Talk about the quality. Talk about the sales. Talk about the reviews. Do not lower your price if you can, because you start lowering your price, you set a precedent, and then you start making less money. And if I'm a company that invested capital in your business, I'm here to make money, not lose money, right? So do not lower your prices unless it's a last resort. And finally, the last objection is, I have similar products in my assortment. If they have common products, ask, maybe offer better service, better margins, better terms where they can maybe conciliate a couple of those brands into your own business. So that means the retailer has less brands to manage, which makes their job easier, which was our topic earlier. Now, when you finally get the green lights to send a sample, right? They want to move forward after you answer the objections, right? Make sure you have they verify their name. My name's not easy to spell. Make sure you ship the right address. Last 2 years, we have been working from home. So make sure it's going, it goes to the house, it's supposed to go to their store, to their corporate office. So make sure you verify the name and where you should ship those samples. And finally, you also want internally, you and your team, determine when should I follow up? Because send a sample today and call in tomorrow is probably too soon. Send a sample today and follow up in a month now is probably too late. I recommend usually about 2 weeks. Once the buyer has received a sample, they'll follow with him or her and see what their thoughts are and what our next steps could be. Now, I mentioned trade shows is one of the strategies that a brand could use to build awareness and find retail buyers. Here's some tips on making your next trade show a success. So make sure the trade show you commit to, right? You've done some research, right? I've seen trade shows where, why is that brand there? They shouldn't be there. All right, it doesn't make sense. So make sure the trade show is a fit for you. Have a strategy there. Why are you going? Are you there to meet new retailers? Are you here to talk to existing retailers? Are you here to get PR coverage, media coverage? Are you here to build partners, through alliances? So why are you going to the trade show, right? Make sure you have people. If you're a one-man operation, you might want to bring other people because it's tough. I've done it. It's long days. You got to eat. Got to go bathroom breaks. You need a mental break. So have enough people to go with you to cover the booth. Also, people who do accomplish a show with you, make sure they're friendly. They're polite. I remember a trade show in 2020, at least 2 booths. The people who were in the booth were half asleep. They're exhausted, maybe jet lag, or they're bored. They're on their phones, right? They'll walk away. So make sure the people you do bring are friendly, they're polite, and show approved body language. You also, depending on the type of product you have, maybe have someone on your team that asks you more technical questions in case a buyer wants to stump you. Obviously, at a trade show, you got a lot of other exhibitors who are probably just as good as you are. A great way to get people into your booth, a demonstration, right? Show up if you can to demonstrate your product. And if you can't do that, have a video, a TV screen showing your product in use if you can't do a demonstration in your booth. Make sure, this is really important, I say it as a flaw, with many small brands, have a protocol in place to follow up on leads. Many trade shows, I put my business card in. I'm a big builder or retailer, and I didn't get as many return emails or calls back. So make sure you spend all this money to go to a trade show. Make sure that you have a process in place to follow up on leads, prospect, or likely customers. And finally, make sure you always say thank you and don't get those free cookies, all right? So let's say you get the green light. The buyer says, hey, Paul, I'm ready to invite you into my office here in Dallas. What are the next steps? You want to put together we call a presentation folder, right? And the components are really simple. A overview of your company, right? Some market research or testimonials on your product, company, or brand. Brochures or slicks, as they call them in the industry. Having your price list, very important. Having a hard copy of your deck, right? Because retail buyers like writing notes, right? So in case that there's no video monitor in their conference room, now at least have a hard copy of the deck to kind of walk the buyers through. And probably include your business card with your folder. When developing that PowerPoint presentation, again, these are all getting common sense, but again, I've seen a lot of mistakes made. Don't overload slide a lot of information. Keep it simple to the point. Make sure the slides, the sequence of slides makes sense. So your pricing slide is not the first slide, right? Should be more near the end of the deck. Again, don't assume the buyer knows every feature and benefit. So make sure you list them out or at least discuss it at a high level in your presentation. And when you meet with the buyer, make sure you use common sense. So arrive on time. Don't smoke before. Don't wear a lot of perfume. Don't chew gum, right? These are things, again, common sense things. But again, doing this for a long time, I see these mistakes made when I was a retail buyer. Make sure samples are working, especially the night before. You hate to have a big meeting with a retail buyer and the product doesn't work. I've seen it done before and it's very embarrassing. So make sure your samples are working before you meet with the buyer. Make sure you have copies, enough copies. Maybe the buyer bringing himself and 2 other team members. So make sure you have enough copies for everyone on their side to take notes. Your small talk should be brief. Again, don't talk about the baseball or the weather or whatever. Keep it, if you have an hour, keep it an hour or less. If it's less than an hour, I guarantee your buyer will be thankful, right? Also, you want to listen carefully. especially for large retailers. So they're public entities. They can't share a lot of information, confidential information. But listen carefully. It might give you some tips and suggestions. So definitely listen carefully and take good notes. And again, like I said earlier, always follow up or follow through on those action items. But you're there to close a sale. So at the end of the day, when you're talking to a buyer, whether it's the first date or the third date or the ninth date, the goal is to close a sale and hopefully make money for your business. And finally, once you get the green light, they want to move forward. There are vendor agreements and contracts. Obviously, a good lawyer will help you through that. There are obviously the things you want to look at: payment terms and discounts. Are they net 30? Are there other discounts? Obviously, as a small company, cash is king. So understand what are the payment terms, discounts that particular retailer. Back-end programs with marketing allowances or admin allowances, what's required to move forward with that particular retailer. Bomb incentive or different allowances to incentivize the retailer to buy more, or if you have a defective product, do they send it back to you or to destroy it in stores? Other things which will probably be in their vendor manual or vendor agreement, we call it vendor compliance. So how do you take orders? How do you ship? How do you invoice and so forth, right? So these are things you need to make sure you know forward and backwards before you move forward. Because if you ship late, ship incomplete, you're going to get charged. And those charges will eat into your gross profit. Returns, if a customer returns a product, what happens? What's the process? So these are things will probably be covered in your vendor agreement. If not, make sure you bring up in your meeting with the buyer. Other things that may not be addressed in the vendor agreement, but you should definitely discuss it. Product warranty. Is this a stock program or are you going to drop ship? Who pays the freight? Is there a minimum order? These are things you want to make sure you address before you sign a contract and move forward to the next step in the process. But in summary, some retailers isn't too difficult, relatively speaking. They follow 3 simple principles. 1, be prepared, right? Make sure you're acting together. 2, make sure you make the buyer's job easy, we kind of talked about earlier. And finally, always follow through on your promises. If you do that, you're guaranteed a long run with any retailer here in the U.S. And that is the end of my presentation. Any questions at all?
I had a question for you. My question is, you mentioned that the payments vary from one retailer to the next at how long it takes to pay them back. What do you see out there in the market now?
So for large retailers like Walmart, Best Buy, Target, typically it's net 60 payment terms. So that means that they have 60 days to pay your invoice. Smaller retailers probably net 30. You might see between mid-size and large retailers, early payment discounts could be 1%, 10, net 30, meaning that they pay your invoice in 10 days or less, they get additional 1% off. Or you might see 2%, 30, net 60. No retailer in the U.S. is going to pay up front or pay a down payment, by the way.
So what do you coach startups to do about cash flow cycle from the time they put money out to build a product till the time they get it back from the retailer? What is your coaching with them?
So I always say that we believe our clients' money is our money, right? And since cash is king, we don't want to expose our clients to a lot of risk up front, right? It's about starting small. So typically we try to go for smaller retailers that will buy net 30 or offer an early payment discount that will require not a lot of inventory to get started and will pay on time, right? And once sales are consistent, the client's supply chain is bulletproof. And by the third thing, once the client's getting paid on time, that makes sense to scale for bigger opportunities. Typically, the challenge a lot of our smaller clients have is consignment. Now, you said they already paid the factory, right? Other fixed expenses. And now if they want to work with Best Buy, for example, they might say, hey, we want consignment, which means they're not going to pay you to the product he sells through, right? So that's probably the most common thing I get asked, not the terms, but more like if it's consignment or I'm actually get paid on time.
Great. My next question is, how do you know if you should buy into the in-store advertisement program? What do you look for to say I should put money in there or not?
So that's a great question. So I would say that it depends on the retailer and also the brand. We have some brands that have done, certain marketing vehicles that work well for them that have not worked for others. I say you got to try, like a beta test, right? Where we had a retailer, a brand that was Best Buy, we spent X grand on an email blast. And the results were, where we had a similar brand do it with a different retailer and did very, very well, right? but it's trying things. I would say that retailers' marketing vehicles, where it's email blasts, banner ads, paid search, it's very expensive, right? I always say try to do things yourself. So if you could do paid search, you can do influencers, content, and you can do dry traffic to a website. Usually my first choice before you invest in retailers' marketing vehicles, which could be very expensive, especially for smaller brands.
I have one last question, and that is, how do you test new products in these channels? You certainly can't do it on the shelf at Walmart, but how do you test it before you get there?
So like I said a little earlier, it's about starting small. So maybe find some smaller retailers to get in store, right? Or for Walmart or other large retailers online. That's a beta test, because if it doesn't sell well online, how does it sell well in store, right? So I would say for any young brand interested in getting into retail, it's about getting online with a couple of retailers like Amazon and other .coms. Maybe find some smaller retailers. And then once sales are doing well and some other metrics, then it makes sense to reach out to bigger retail to get more opportunities.
Great. Well, if there are no more questions, I want to thank you, Johan, for joining us today. Appreciate you sharing such great information. We'll make the recording available to everybody, and there's a lot of good content in there as well. How best for them to get back in touch with you?
Like listed here on this last screen, if they have any questions, go to our website, retailbound.com. You can definitely reach me on LinkedIn or shoot me an email at yjacob@retailbound.com.
Great. Well, I appreciate you sharing that with us today. Thank you, Kristen, for the shout out there as well to Johan. And with that, we'll go ahead and close it out and looking forward to next time.
Take care, guys.
Thanks so much, Johan. Thanks, guys,
Bye-bye.
for joining us. Good questions. Thanks.
Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.